Welcome. Thank you so much for coming to watch the video today. We are taking a deep dive into the Xcel Energy 2025 year-end earnings call. And honestly, if you think utility earnings are just some some dry financial update, you might want to think again.
Oh, absolutely.
Yeah.
I mean, this call is really a window into how the whole artificial intelligence boom is physically reshaping our world.
Exactly. So before we jump right into the Q&A, let's just do a quick summary of their prepared presentation. Financially, they're sitting very strong. They delivered 2025 ongoing earnings of $3.80 per share, reaffirmed their 2026 EPS guidance of $4.04 to $4.16. Plus, they're targeting an impressive 9% average EPS growth right through 2030.
Yeah, but the real headline, the thing everyone is looking at, is their strategy and growth. They outlined this massive $60 billion five-year investment plan, and the driver, explosive data center demand. They've actually doubled their target to 6 gigawatts of contracted capacity by 2027.
Right. Which is just a staggering amount of power to spin up. And to do it, they announced these strategic partnerships with Xcel Energy and GE Vernova to rapidly build generation. They basically had to hit the accelerator.
And operationally, they're trying to pull off a huge balancing act. They still maintain some of the lowest customer bills in the country.
Wow.
Colorado is actually #1 there, and they've made major progress settling both the Marshall and Smokehouse Creek wildfire claims.
Okay, so let's get into the Q&A session breakdown because you could tell analysts had AI on the brain. Starting with Brian Russo, who was on for Julian Dumoulin-Smith, he asked how the Colorado large load tariff ties into capacity and if there is upside to the $10 billion CapEx pipeline.
And Xcel's response was that the tariff will be filed early in Q2.
Oh.
As for the CapEx, they said there is significant upside to that $10 billion, simply because it didn't initially include all this massive Colorado data center growth.
Makes perfect sense. Then we had Diana Niles from JP Morgan. She wanted to know when data center sales will actually impact that 5% growth rate, and also asked for the status of the remaining $50 million Smokehouse Creek liability.
Right, so Xcel responded that the data center sales impacts will be felt heavily in the late 2020s and into the 2030s. And on the wildfire settlements, they noted things are progressing rapidly, with over 320 claims already resolved.
Next up was Carly Davenport from Goldman Sachs. Her question was about what roles Nextera will actually play and how upcoming elections might impact rate cases.
Which is a very fair question. Xcel responded that Nextera brings pure speed and a national platform. And regarding the elections, their stance is that their unmatched affordability narrative perfectly aligns with state clean energy goals.
Yeah, and just as a quick note for you watching, we aren't taking any political sides here. We're just reporting Xcel's view that keeping power cheap and reliable tends to be universally popular. Moving on, Stephen D. from RBC Capital Markets asked how the 6-gigawatt data center pipeline impacts sales and what the timing is for Colorado's RFPs.
To that, Xcel responded that meaningful sales will hit post-2030, with a major plan update coming in Q3. For the RFPs, the Colorado Commission is reviewing those in tranches through early 2026.
Then Nicholas Campanella over at Barclays asked when return on equity will improve and what the ceiling actually is for that $10 billion plus CapEx.
They expect significant ROE improvement in Colorado by 2027. And with new transmission lines and data center builds, they responded that the CapEx pipeline has substantial uncapped upside.
Wow, uncapped. Okay, so Travis Miller, he's from Morningstar, asked what the regulatory process is for energy supply agreements or ESAs and whether data centers are trying to sort of bring their own generation.
Xcel responded that ESAs will align with large load tariffs. Interestingly, in Xcel's regulated markets, they prefer building the generation on the network to share fixed grid costs. That protects everyday consumer prices.
Which brings us to the final question from Paul Patterson at Glenrock Associates. He asked, what is driving the public pushback on public safety power shutoffs in Colorado?
Xcel's response was firm. They stand by the shutoffs as absolutely necessary to prevent catastrophic wildfires during severe weather, though they did recognize the need to improve customer communication and outage mapping.
So high-level wrap-up time. The main themes from this presentation and Q&A are massive, data center-driven load growth extending into the 2030s, along with a strict focus on grid reliability, affordability, and proactive wildfire management.
It really is an unprecedented time for utility infrastructure.
It truly is. Well, thank you all for watching. If you liked the video, please click like, share it, subscribe, and stay tuned for upcoming content. And as you go about your day, ponder this. How might your own local utility grid soon be completely reshaped by the hidden infrastructure of AI?